Hype Hazard, your source for exposing the tech behind the hype. Today's technology landscape is full of buzz and cash, but it's also full of trash.
And in our show, we navigate the noise around today's hottest new tech companies. We're slashing through speculation, we're taking heed of hazards, and we're helping you unearth where the real opportunities lie.
So, if you are innately curious about new technologies and wondering what's really worth your time and your investment, this podcast is for you. Before we jump into the tech du jour, though, let us introduce ourselves. I am Jamie Szymanski.
And I'm Jessica Grootman, and we are technology analysts and the founders of Kaleido Insights, a research firm. Jamie and I have spent our careers researching dozens of emerging technologies across every industry and really thinking deeply and analyzing how they impact consumers, businesses, and all of society.
We have seen plenty of BS along the way. But also, we've seen a lot of exciting developments that have truly changed our day-to-day lives. In Hype Hazard, we'll share our years of experience with you discerning innovators, to help you understand new, hyped-up technologies for what they really are.
Now, to let you in on the secret here, there's a lot of frivolous froth out here, and that's exactly what inspired this show. So, with that, let's get into it. Today, we're talking about Robinhood and investment apps. So what is Robinhood? A compelling name indeed. This is an investing app, one of the many fintech or financial technology unicorn companies launched back in 2015. A very millennial-centric app. What this app is all about is commission-free trading. Now, before Robinhood came along, people had to pay every time they bought or sold a stock. And Robinhood introduced, not only to the world, but also to the financial services market, which has, by and large, adopted this as a common policy, commission-free trading. So that's kind of their claim to fame. The company's mission is to provide everyone with access to financial markets, not just the wealthy. Now, we'll get back to both of those claims in a moment. But in terms of what this is and kind of what they offer, what they don't, commission-free trading, as I mentioned, also cryptocurrency trading, all the rage, free stock options, ETFs and trades, and the account minimum is zero. So this is kind of getting back to this, anyone can access. You don't have to be able to afford, a high-value share or anything like that. Now, it doesn't offer retirement accounts, mutual funds, bonds, things that are typically included in well-diversified or longer-term portfolios. But it's really focused on commission-free trading and really allowing retail investors and day traders to access kind of anyone or any fractionalized stock by the tap or swipe on their phone.
I would add that as well, yes, that it's primarily used on a mobile app at this point. And if any of you listeners have downloaded it, it's a pretty slick interface, and more on that later. In addition to what you said, that, $0 balance in your account, which is rare for an investment app in general or an investment company. But they also allow the purchase of fractional shares, which I thought was really interesting once I downloaded Robinhood a couple years ago. So let's say if you can't afford an entire share of Tesla, you could buy a fraction of a share based on a dollar amount. And in March, it notified the Securities and Exchange Commission of its plans to hold an initial public offering or an IPO.
And it's now valued at $20 billion in revenues. Well, 2020 was a massive year for retail investors generally. In fact, the space grew by 10% more year over year than any other year. Now, this is, broadly speaking, a good thing in terms of democratized access to the stock market. But 2020 year was a boon year for this, and Robinhood played a huge role in that. So needless to say, their revenues grew significantly. In 2020, they reported 13 million users. So this is a fairly large company.
I saw that. And to your point, too, in being early 2020, they also said that more than 3 million people opened Robinhood accounts in the start of 2020, which is pretty huge. Being in a millennial app, too, the median age of Robinhood users is 31 years old, which is very young in comparison to other investment firms in terms of the median age of clients. And about half of them are first-time investors. And this really gets into a lot of the hype around Robinhood in general. It starts with, as you mentioned, the commission-free trading. And this commission-free trading was really new when they launched it. In October in 2019, it actually forced all of their competitors, so everyone from Fidelity to Charles Schwab to E-Trade, they were also all driven to cut their commissions, which they originally were about $5 per trade, to zero. Now, of course, on these apps, you still have to pay. It's about $5 if you want to trade certain kinds of securities, penny stocks, they're often called. But most trades are zero. And when Robinhood forced the industry to do this, to lower the costs and commissions, they lowered the barrier to entry to investing. So all of these new investors and those with maybe lower incomes than traditional investors were able to actually enter the market, and they were able to buy stocks. And, more recently, they're able to buy cryptocurrency. And this is a big part of Robinhood's, pull in the millennial market, is that they are trying to position themselves as sort of an enlightened version of Wall Street with their stated mission to democratize finance for all.
A lofty goal.
It's a very lofty goal. And, it's hence where the name comes from, too. Robin Hood, steal from the rich and give to the poor, which the irony we will talk more about later. But they've often argued that, they're putting all of these investing tools that were typically only available for wealthy and professionals into the hands of everyone in order to reduce inequality. I thought it was interesting. One of the founders, Vlad Tenev, he often likes to cite in interviews Thomas Piketty, who is the author of Capital in the 21st Century, in terms of describing the wealth gap as actually an investing app. And so he says that, he'd like to give access to more people these more sophisticated financial opportunities, which includes more financial information and more financial tools. However, people who typically have invested in the past also have money that they afford to lose. So some of the risk that has also come out of Robinhood is definitely some of the hazard, which I'm sure we'll chat about too, Jess. But before we get to that too, I will say that a lot of the hype has been around not only democratizing investing for everyone and lowering that barrier to entry and sort of stimulating this whole new generation of investors, but it's also because the app is pretty slick. It's a really great mobile UX to it. The color of the app is green, and they say it was supposed to be, they changed it from a teal color to a green color to feel honest and true, is a real quote. When in reality, this goes into another part of the hype, it's because it stimulates this feeling of gambling and money.
Right.
Which is crazy, right?
Well, and we've talked about this on the show before, thinking about some of the user experience implications of gamification. Gamification makes things very sticky. When we see a big, bright red or pink, notification, or, when you sign on to Robinhood, it actually offers you a free stock, and the experience of gaining that free stock is like, pick a door, any door, and it bursts into confetti once you've done it.
So used to be a scratch off. Did you know that when I first downloaded the app, you literally scratched it off like a lotto ticket?
And so this is fun. There's no denying that there is a sea change in what it is to interact with a financial services experience like this versus going to a bank, sitting, having a very dry conversation. Certainly it, I think, is fair to say that part of the hype around Robinhood has been transforming and truly disrupting the front end of financial services. The gamification, the stickiness, the accessibility, dare we say inclusivity of what a fantastic user interface can do. By the way, that's in your pocket, available at all times. That feels a lot like, you would play whatever, any kind of online game that you play.
It feels like you had this casino. It's just there pocket at all times. Yeah, absolutely. And that's kind of the scary part of it too. Listeners of our show will know sometimes the hype is inherently the hazard as well, which is kind of the case with this, is that the usability barriers are also lower because the mobile app is so slick, so easy to use. However, that also makes investing itself and the very idea that money is going in and out of your account and pocket pretty inconsequential. So it's really based on a lot of these same principles of gamification that we see a lot in tech, where you don't want people to even think about the fact that money is going back and forth. They just think they're playing a game of some sorts on Robinhood.
And it again gets to this theme in terms of design decisions of apps, and particularly in kind of the direct-to-consumer space, of the role of friction. What is the role of friction? Well, it's to mitigate risk, it's to inform. And when we're talking about financial services, being risk-informed is crucial. Robinhood has come under a lot of heat around just how much research they offer. How is their research or customer onboarding or financial literacy experience actually displayed at at the cost of speed, at the cost of increased, high frequency trading, which is their business model. And so they've made some moves in this area, but it really, this is the elephant in the room in terms of an incredibly slick, beautiful user interface. Well, the downside is if Joe Trader or Jane Trader can lose his or her shirt doing this because it's just so freaking easy, that's part of the hazard here that is really easy to overlook. When something is so easy to use, it literally feels like you're playing a game.
Mm-hmm. And I think that, we're leading up to something larger here in conversation in terms of their business model, as you mentioned, which is based on the amounts of trades that are coming in and out, which we'll talk about in a moment. We would not be even discussing Robinhood today if it was not for GameStop. Would you agree?
The grand squeeze.
So I think we have to talk a little bit about the GameStop hype that sort of brought Robinhood into the forefront.
Yeah.
And that might be a nice little segue then to kind of discussing their business model and why there's been so much frothiness around this technology. So for those of you that aren't familiar with this GameStop debacle, let me give you just a brief primer of it so that you understand why Robinhood was under such scrutiny and why it's so popular. So several large hedge funds earlier this year in 2021, including Melvin Capital, remember that name, they're a $12 billion hedge fund, they had borrowed GameStop shares and sold them short. And that means, to sell them short means they were betting that they would go down and the company might go out of business. And so millions of individual investors, or you might hear them called retail investors, sort of came together on Robinhood and other apps and online on a subreddit called Wall Street Bets, which you probably saw in the news a lot as well. And they decided to buy those shares. And it wasn't so much because that GameStop they thought was actually going to have a boon or anything.
Particularly during pandemic times.
Yeah, they knew that they wouldn't, but it was more so to push that stock price up and force Melvin Capital and other market makers, as they're called, to have to buy them back at these huge fees and these exorbitant amount of stock prices, triggering what Jess referenced there as the short squeeze. So in the end of January of this year, the stock, GameStop, it started at like $8 a share or something. And at the end of January, it hit $380 a share. That is a 1,500% increase that had been even 2 weeks earlier, Jess. It was wild to be part of this just roller coaster. Again, it felt like gambling. It felt like you were just having some fun with it and you were part of a movement of sort. Well, earlier the next morning then, Robinhood made an announcement saying, hey, we are going to restrict transactions for certain securities. They were referring to GameStop and a couple of others, AMC and BlackBerry, that were experiencing these really volatile price swings. And Robinhood users were only allowed to sell the shares they already owned. They were not allowed to buy new shares. And this caused one of the biggest uproars that I've seen in any recent memory in the investment community. And it triggered a lot of conspiracies, right? So people automatically thought, well, they were in the pocket of Melvin Capital, that this was just to protect their interests, when in reality, the Depository Trust and Clearing Corporation, which is responsible for clearing and settling all security and trades, they requested that Robinhood had to deposit this very, very large amount of money, $3 billion, to cover all of these stocks of GameStop and other volatile stocks. And they couldn't do it, so they stopped trading on it in order to get that amount lower. But the damage had already been done. So after the stock market opened the next morning, GameStop plunged down at least $2.50 a share to $112, hence really cementing Robinhood in a lot of these new traders' minds, these millennial traders, as a fraud. And in its very name, to say that it's Robinhood, steals from the rich to give to the poor, that they actually don't care about the little guy, and that people started boycotting the app, which was a huge reason why it came to the forefront. I mean, I don't know about you, Jess, but everybody I talked to about Robinhood, you don't know about it unless you've heard about GameStop.
It became synonymous with this, short squeeze. And it was fascinating because although, as you said, it turned out to be a conspiracy that this was sort of a hedge fund collusion with Robinhood, the narrative was born and took on a life of its own. Of course, welcome to the internet. But this narrative of, kind of David and Goliath, or the establishment versus the little guy, took on an immense amount of traction. And it wasn't just, retail traders and Robinhood users who sort of threw down a flag on this. It was also regulators across both sides of the aisle, lawmakers, protesters showed up outside of the SEC, as well as Robinhood's headquarters in Menlo Park, California. There was a huge influx of one-star reviews on Google Play. It launched a class action lawsuit around alleged market manipulation. So it was a massive tidal wave just unleashed on this company. And we've talked in the past about sort of the power of a narrative, not only as sort of a vision for a company, but also to procure investment. By the way, Robinhood has a tremendous amount of investment behind it, but also across the ecosystem. And so you had, we talked about kind of the good side of this narrative of shifting other legacy financial institutions to offer commission-free trading. But then the downside of this narrative of, actually, when the jig is up and we see that, well, Robinhood has both obligations to existing, if not the front end of their app, the back end of the financial services ecosystem, as they have to deal with third-party market makers and clearinghouses. It just fundamentally goes against that, for the little guy, democratization, Robinhood narrative that they have. The other thing I think is fascinating here about, both the hazard, but also as we look at the kind of where are we going with this and how do we fit this into the zeitgeist? This broader area of investment apps, especially as planned and coordinated through social media or through social features, including gamification, this is starting to be called meme stocks. So the GME is an example of a meme stock, but this idea of, what we at Kaleido kind of term this is the collision between crypto and social. And it doesn't just have to be crypto, but you can see these dimensions and these dynamics between social media, these sort of viral industrial complexes that are full of both influencers with incredible influence to shift conversation. I'm thinking of Elon Musk in the example of the crypto space, but also anonymity and bots and who is saying what on Reddit threads. We don't really distinguish necessarily, but they're driving tremendous market moves. Can we call them manipulation? Nobody seems to agree on that. Not necessarily, not at least from a legal perspective, but also social media's relationship to news. And, it's always on. What is the business model, whether we're talking about for high frequency trading or whether we're talking about for clicks and engagement? There are some real parallels here, as well as just the sort of wild ride that 2020 has been for financial services, for crypto, for fintech as a space, and these cultural questions. I mean, part of the fascinating thing about Robinhood in its name in specific and how that has impacted its experience as a company and as a startup is this broader, reckoning around income inequality, these tensions between the rich and the poor, this question of what is inclusivity versus paternalism. Kara Swisher had a fantastic quote asking, is the ability to invest with a swipe of your finger inclusive, or is it predatory, leading less experienced investors astray at the whims of Wall Street?
I think it's 100% predatory, personally. I think that I'm sure you've read some of the stories too, some of the really heartbreaking stories of the enormous losses that people have racked up because they are given this newfound power without the education, though, behind it in order to invest and borrow money against companies like Robinhood. So if you're new to the investing world, in Robinhood as well, you have the option to trade on what's called a margin account. So you can basically borrow money from Robinhood to put into trades, and then you have to pay it back at a later date. So not only does a margin account have the opportunity to get you in a lot of trouble if you're at a different side of the income gap there, but also they allow you to trade what are called options, which is how you can rack up, yes, like I said, those really enormous losses, which is basically it gives you the right to buy or sell larger amounts of the same stock in the future at a set price. And for these option trading in particular, Robinhood gets an even greater amount of income off of those transactions than others. And I think this is probably a really good time to pause here and talk about, at its base level, the irony of the name Robinhood, specifically in terms of how they make the most money. And it is through a process that is abbreviated as PFOF. PFOF. Payment for order flow. I mean, it's base level. What it means is that they get paid a back pay, a little skim off the top of every single transaction. They are paid that from those market makers, the people that actually settle the transactions. a lot of documentation is shown, including part of lawsuits that they're in with the SEC right now, that Robinhood not only they have not disclosed that PFOF is their main revenue model, but they have been shown to not choose the right market makers to produce the highest value per trade. Instead, they go to ones where they will get the largest amount back from them through the algorithm versus give the best revenue to the actual user. So you can see that it's the exact opposite of the principles of Robinhood. They are trying to make more money and they are trying to give less back in terms of trade price to their users, which is one of the biggest hazards, I think. And obviously the SEC agrees, Jess.
Well, and they just agreed to settle this for $65 million to settle the charges for this. So now what changes will they make to reconcile? I mean, this is the question, and frankly, what I evaluated most when it comes time to rate this company on our highly scientific scale. How will they reckon this fundamental mismatch between not only the narrative of the company and the name, but also fundamentally the direction of the financial services industry? We all know that the existing rails, the back office, if you like, of financial services is quite archaic in several different ways. I mean, settlement is one of the most obvious examples, but there are so many examples of ways in which the practices and the accessibility are based in previous decades. And given the technological capabilities, not just of big data and mobile apps and cloud computing and all of these pieces that bring devices and tools into more hands, but also reconciliation and real-time settlement, or T+0, which is to say settlement on the same day. How will Robinhood move forward to bridge what it wants to be and also the direction of the industry while continuing to make money? And very interestingly, there are several interviews where Vlad Tenev, the CEO, has been pressed on this. And ultimately what he says is, look, we've never claimed to not be a for-profit company.
We just conveyed it in all of our messaging and all of our marketing and the narrative of us as a brand, but we never claimed to be that. That's interesting. I like that you talk about, though, just the traditional banking industry in general, Jess, because the thought I had as well when thinking about the future of Robinhood and the space in general. And I recall in the beginning of this show, when you were sort of defining Robinhood and what it does and what it doesn't do, a lot of the services that it doesn't do, more traditional banks do offer, though.
Right.
So I think that we'll have to sort of think about how Robinhood and now some of these same features that are being adopted by other messaging apps, how that shows that this new guard is sort of competing with this old guard of fintech and what that will do for what we describe at Kaleido Insights to the ecosystem at large. Like, you're both competition, but yet a lot of times, like Robinhood just announced that now JP Morgan, which is a huge traditional bank, is going to be, underwriting basically a lot of the transactions and making sure everything goes smoothly on the back end. JP Morgan is sort of engaging now in this co-opetition, I guess you could call it, with Robinhood. So I think we'll definitely see a lot of new relationships and partnerships emerge in fintech at large, which the reverberations will be felt beyond the financial services industry.
Well, and it takes a village, and this is one of the areas where Robinhood can't do an innovative update to our financial rails on its own. No single company can. It certainly requires, the assistance of government, blessing, regulation, whatever you want to call it. But Robinhood in many ways has sold an innovation without saying, well, we're really innovating on the sort of front end, the app, the experience, the interface, but we can only do but so much innovation on the back end because this is an ecosystem piece. Now, one of the pieces that you mentioned of, looking at some of the offerings of traditional institutions and what Robinhood doesn't offer, things like, long-term bonds and, retirement accounts, mutual funds, this sort of thing. Conventional wisdom is that most inexperienced investors do better with long-term investments in retirement accounts than they do with making day trades based on little information or little.
Well, data has shown that if you are not actually educated in the principles and practices, the correct things of day trading, and you just try to do it on your own through an app or Robinhood or E-Trade or something like that, or Fidelity, you actually will lose more money than if you kept and held your investment portfolio with either some safer stocks, as they would say, not any of these meme stocks, of course. I'm thinking of the future of Robinhood, like what would make me respect it more as a company?
Tell us how you really feel.
Yeah. Right, I'm really not holding back on this. And I told you I was jazzed to talk about this today. It's really predatory to your point earlier that you said. So I think that they really need to examine on their own proactively, not just when they're taken to court over it, but some of the gamification components and the gambling components of the app design. It is heartbreaking to read about how much trouble people can get into because it feels inconsequential. And related to that, there needs to be better education of these, younger, more idealistic user base that they have to avoid those terrible situations of loss. And part of that too is maybe some better limits on margin trading and options trading with better rigor and analysis on if people can actually cover the intended loss of a call or a put. And I think that sort of thing needs to be on their roadmap far over what they're focused on now, which to your point, which is this front end usability, which sure, it's a lovely app. So that's the good thing I'll say about it.
It's beautiful.
It's a really nice app. Right. But it doesn't, fix all these other issues, as well as the fact of, as you said, it was just settled. I mean, it was just last Thursday, the SEC had a lot of comments, as did Senator Elizabeth Warren, as well, talking about not only the gamification components, but also the need to disclose their revenue model, that they're using this PFOF, and to disclose how customer data is being used and be more transparent about it, not just let's do wrong on behalf of our users and ask for forgiveness later.
Right. It's funny because part of the trend with, what are sometimes called digital native services or app-based companies is that they really leave a lot to be desired in terms of customer support. Maybe some of us have experienced the horrible loop of a chatbot, or you can't talk to someone on the phone. And this is actually the case with Robinhood too. Now, a little bit of a backstory. They have made some investments to improve their customer support. But this is worst case scenario. One of their users in June of 2020, who was a University of Nebraska student, actually committed suicide after seeing a negative cash balance of $730,000 in his margin trading account. And so, needless to say, Robinhood was put under fire. He actually mentioned the company in his suicide note, and it turned out to actually not be true. It was a temporary negative balance that they had showed as part of the UX to just show that there's still unsettled trading activity. But nonetheless, this was about as tragic of an outcome as you could imagine for a user experience. As a result, they made a lot of investments into customer support, but it still leaves a lot to be desired.
It still does. I mean, that's important to note in that story. Is a big reason in terms of him taking his own life was because he could not get a hold of anyone at Robinhood. His phone records showed that he had called a few times right preceding his death and couldn't get a hold of anybody to tell him what was going on. And it's a great point, Jess, as part of that beautiful user interface. Well, sometimes it leaves details out that, in this case, were incredibly critical. And you're right. Since then, they said that they've invested by hiring what they call customer experience employees. And they have the option now that you can put in a request to be called back. But, I've read on multiple forums online. I've never used that myself, but I read that people said it takes sometimes up to days. So I think that it's still not solved. That's a really good point in terms of something else that needs to change that we hadn't touched on yet.
And, frankly, doesn't quite square with a business model based on high frequency of trades, right?
Yeah.
Could, for example, users be prompted to sort of self-reflect? Are you here to make some quick cash? Are you here because you have Reddit-induced FOMO, fear of missing out? Or are you wanting to put what money you have? Maybe it's a very small amount, but are you wanting to think about a longer-term strategy? Right now, they don't have a service offering around a longer-term strategy, but how to reckon that business model based on high frequency versus a longer term, which is probably better for most traders, especially younger, given their demographic.
Yep.
How will they reconcile this? Well, Jamie, it's up to us to rate.
I think it is too. I was going to say, we're getting so much into some of this justification for ratings even. So, dear listeners, at this point in the show, we always rate the technology at hand. Jess, let's talk about the ratings.
Well, will it be trash? We don't need to explain what trash is. Will it be a flash? Maybe it's hot now, but a flash in the pan. It's going to be fleeting over time. Or is it cash? A big money maker, maybe worth billions, but ultimately a copycat in terms of real innovation. Or a splash, something truly disruptive and promising that solves a real societal problem. Jamie, tell us.
I rate Robinhood cash. It was a very easy rating for me, simply because of the fact of, when they introduced commission-free trading, it was adopted almost immediately by every other major app with the right bandwidth for things like customer service, with the same business model of PFOF, with the same offering. So that just shows right there, they offer things that already are being adopted by others in the market. It's not really innovative, I don't think, anymore, and it was pretty fast. So I thought, well, maybe is it a flash in the pan because it was pretty hot, in one moment of the zeitgeist there, as you said. However, I think that this exact same features are creating something new and expected in terms of their disruption in the investment marketplace and some of these more legacy investment firms. So I don't see it much beyond a moneymaker right now, and a big moneymaker at that. But these same features and the same targeting of this more millennial-centric audience, I think, will be adopted by other investment agencies who also want to rake in a little bit more cash from their users. What about you, Jess? What do you rate it?
Well, I can't deny that this has already been a lucrative business, and certainly this narrative has procured a significant amount of investment. However, I'm going to call this a flash. I think Robinhood is white hot or green hot now. But in the long term, this is a representation of an advancement on the front end, on the UX, on the interface, on the app, but less so on the back end. Now, as I mentioned, that's an ecosystem-wide effort. It's not something that Robinhood can single-handedly do. But how this company aligns its practices with its narrative. Will they continue to sort of shrug off or bat away criticism when they're acting like the old, financial giants of the world? Or will they pivot and rethink their business model towards more crowd enrichment rather than just empowerment for themselves? The reason I say flash is because there are already companies coming up who are offering very, very similar services, but with a different business model. And the interface, the design itself is arguably the easy part when we're talking about long-term financial innovation. And so there you have it, listeners. Thank you so much for joining us for another round of Hype Hazard. To learn more about us and this topic and all of our research, please join us at kaleidoinsights.com. This podcast was edited by Randall Ward, and our theme music was composed by Adam Roskowitz. Thanks again for joining us. We'll see you next time.
Bye-bye.